True or false? Inflation equals stock market sell-off. I'm Bob Stokes with Elliott Wave International. The topic of inflation has been grabbing a lot of financial headlines. Indeed, financial journalists have blamed inflation for recent stock market sell-offs. On May 11th, when the Dow Industrials closed 475 points lower, an intraday headline said, Wall Street drops on inflation jitters, led by tech stocks. The next day, on March 12th, the sell-off persisted. Another financial news source noted, Dow tumbles 680 points in worst decline since January as hot inflation reading spooks investors. So at least two news organizations agree that inflation was the culprit behind the sell-offs. However, investors who follow the news closely may have done a little head-scratching, meaning at the start of the same week, May 10th, the Dow climbed to a record high. So were inflation worries absent on that day? Not according to this May 10th headline. Americans fear highest inflation in nearly a decade. So same inflation worries, but the Dow went up instead of down. And sticking with the same week, the Dow climbed more than 400 points on May 13th and turned in another triple-digit gain on the 14th. So to sum it up, during a 5-day stretch, the Dow closed higher 3 times and lower twice. Does it make sense that investors only paid attention to inflation concerns on a Tuesday and Wednesday, but not on a Monday, Thursday, and Friday during the same week? Hardly. As Frost & Proctor's Wall Street Classic Elliott Wave Principle Key to Market Behavior says, sometimes the market appears to reflect outside conditions and events, but at other times it is entirely detached from what most people assume are causal conditions. The reason is that the market has a law of its own. It is not propelled by the external causality to which one becomes accustomed in the everyday experiences of life. The path of prices is not a product of news. Well, if news and events don't drive market prices, what does? The answer is the wave principle. Let's return to the book. The wave principle is governed by man's social nature, and since he has such a nature, its expression generates forms. As the forms are repetitive, they have predictive value. Specifically, a financial market trend takes the form of 5 waves. After those 5 waves have unfolded, a new trend in the opposite direction is set to start. Now is the time to find out the position of the Dow Industrials in that 5-wave structure so you can prepare for the next trend change. Follow the link below this video to tap into the insights inside our flagship investor package.